Welcome back, everybody, to the deep dive.
Always a pleasure to be here.
Today, we're diving into something really interesting.
Yeah.
Lin Lu's Q4 2024 portfolio
Mm-hmm.
from Himalaya Capital Management.
Right?
And, our listeners will probably know him as the Warren Buffett of China.
Right.
He's really known for this long-term, value-focused investing style.
Absolutely.
And you've actually given us some of your own research and articles that you've written about Li Lu and his approach.
Exactly.
So, yeah, that's a pretty interesting mix of companies in the portfolio.
Yeah.
Some are familiar names, some maybe not so much.
Right.
Big themes here definitely seem to be financial services and technology.
Absolutely.
But there are a few things in there that we'll get to, I think, that are going to raise some eyebrows.
Yeah, definitely some curveballs for sure.
Yeah. So,
This is not your typical passive index fund, that's for sure.
Right.
This is very deliberate.
yeah.
This is Li Lu saying, this is what I think is going to happen.
Yeah, and given his background
Exactly.
and how he's kind of made his name,
Right.
I think it's a signal that we should pay attention to these choices.
Absolutely.
Okay, so let's get into it.
Yeah.
You flagged two holdings in particular
Yeah.
that absolutely dominate this portfolio.
Huge positions.
And we're talking Bank of America at 29.31%.
Mm-hmm.
And Alphabet clocking in at a combined 39.14% with both its Class C and Class A shares.
Right.
So, I mean, we're talking almost 70% of the portfolio right there in just those two companies.
It's a massive vote of confidence.
Yeah.
And I think it speaks to a couple of things. Louis Lukol clearly believes in the staying power of traditional finance.
Mm-hmm.
Bank of America, with its diverse revenue streams from retail banking, wealth management, investment banking services.
It's kind of got it all.
It does.
Yeah.
It's a classic value play.
Yeah.
Stable, well-established.
Right.
It's the kind of company that can really anchor a portfolio.
Okay, so we've got this traditional finance play, but...
But then he pairs that with Alphabet.
Right, the epitome of tech.
Exactly. So he's not just stuck in the old ways.
Eh.
He's recognizing the future.
It's like he's got one foot in the past, one foot in the future.
I think that's a great way to meet.
Yeah.
I mean, Alphabet's dominance in digital advertising, that's just the beginning.
Right, and their growth potential in cloud computing and AI.
Massive potential there.
And remember what we've talked about before with those moats?
Oh, yeah.
Alphabet's got a huge
That's from
wall.
Fortress.
Yeah, it's incredibly difficult for competitors to challenge their market share.
Yeah, you're not going to see a new Google popping up anytime soon.
And that innovation pipeline, too. I mean,
They're always ahead of the curve.
yeah, so it makes sense on the surface. But for a guy like Li Lu, I'm wondering, is this simply picking established winners?
That's a great question.
Or is there something more nuanced going on here?
It's easy to look at those names and say, well, of course, those are good investments.
Yeah.
But for a value investor, and we know Li Lu is all about value, it's not about just picking the obvious winners, right?
Right.
It's about finding value where others might be missing it.
So what's he seeing that maybe we're not?
Well, think about some of the research we've talked about before. For example, you mentioned how banks might benefit from rising interest rates.
Right.
Maybe Li Lu is anticipating that trend. Maybe he sees a play there that others aren't fully grasping yet.
So he's thinking ahead.
Always thinking ahead.
Okay, that makes sense with Bank of America.
Mm-hmm.
But then there's this other big holding.
The elephant in the room.
Yeah, or maybe the Berkshire in the room.
Ah, there you go.
15.01% allocation to Berkshire Hathaway.
Right.
And we know Li Lu is a big admirer of Warren Buffett.
Huge fan.
But is this just a fanboy move, or is there a deeper strategy here?
I think it's definitely more than just fandom.
Okay.
Remember what Berkshire Hathaway is?
Yeah.
It's like a microcosm of the American economy.
Right.
Holdings in so many different sectors.
Yeah. Insurance, railroads, energy.
Word.
It's a very diversified play.
It is?
Which I guess aligns with his focus on long-term stable growth.
Exactly.
But then things get really interesting.
Yeah.
9.81% stake in East West Bancorp.
Now, that's a name that'll catch your eye.
Right. This is a regional bank focused on U.S.-Asia connections.
Right up your alley.
Yeah, exactly. I mean, you've specifically talked about being interested in this kind of cross-border financial activity.
Yeah, it's a fascinating space.
So what's he seeing here?
Well, first of all, it's a significant allocation.
Yeah.
This isn't just a tiny little side bet.
That's right.
He's putting real money behind this.
So he's really seeing something here.
Yeah. And I think it shows that he's willing to look beyond the mega caps.
To find those hidden gems?
Exactly. Those end-of-the-radar opportunities.
So East West Bancorp strategically positioned to benefit from the growing trade and financial relationships between the U.S. and Asia.
That's the bet.
And that makes sense.
Yeah.
But here's where my own research gets a little confused.
Okay.
If Li Lu is so bullish on U.S.-Asia trade,
Mm-hmm.
why aren't we seeing even more exposure to that trend in the portfolio?
Ah, that is the million-dollar question, isn't it?
Yeah, it's like a missing piece of the puzzle.
And this is where we have to remember who Li Lu is.
Right.
This is a guy who built his career by anticipating trends.
Before they become mainstream.
Exactly.
So maybe he's seeing early indicators that this specific niche
U.S. Asia Bank.
he's about to
It
explode.
could be a few steps ahead of everyone else.
Or maybe he's just got a really good network.
He's definitely got the connection.
And he's seeing things on the ground that we're not privy to.
It's possible.
It's like he's got this insider knowledge.
That's the advantage of experience.
Yeah, so maybe it's not that he's not bullish on U.S.-Asia trade broadly,
Right.
but he's hyper-focused on this one particular area.
And maybe he's right.
Right, maybe this is the sweet spot.
Time will tell.
Okay, so we've got Bank of America, we've got Alphabet, we've got Berkshire Hathaway.
The big three.
Yeah, and then this interesting play with East-West Bancorp.
Right.
But what about Apple?
Oh, yeah, the tech giant everyone's talking about.
Yeah, but it only makes up 2.93% of the portfolio.
A relatively small position.
Right, and that seems strange to me, given how much everyone loves Apple. So is this a sign that he's maybe a little less enthusiastic about Apple's future compared to Alphabet?
It's a good question.
Yeah.
Is he seeing limited growth potential there?
Yeah.
Or maybe he thinks Apple's current valuation just doesn't align with his value investing principles.
Right. He's all about finding those undervalued assets.
Exactly. And maybe Apple's just not fitting the bill right now.
So he's not just chasing the hottest tech stock,
No.
even one as big as Apple.
He's got specific criteria.
He's sticking to his guns.
Yeah,
This
it's-
is Lid Loof we're talking
He
about?
doesn't follow the crowd, he leads it.
Okay, so we've got this picture emerging. He's bullish on certain aspects of finance and tech.
But very selective.
Right, he's not just throwing darts at a board.
He's doing his homework.
He's carefully considering every move.
That's the hallmark of a true value investor.
Absolutely, and it's a lesson we can all learn from.
Definitely.
So let's take a quick break.
Okay.
And then when we come back, we'll dive into some of the other interesting holdings in this portfolio,
Sounds good.
like those energy plays.
Those are going to be fun to unpack.
Absolutely, and we'll also talk about what's not in the portfolio.
The minging pieces.
Right, because sometimes what's absent is just as telling as what's present.
Absolutely. It's all part of the story.
We'll be right back after this break.
Looking forward to it.
All right, so we're back and ready to dig into some more of Lilu's portfolio.
Let's do it.
And specifically those energy plays you mentioned before the break.
Yeah.
So he's got 2.67% allocated to Occidental Petroleum, and then a smaller 1.13% to Sable Offshore Corp.
Right.
Now, Occidental Petroleum, that's a pretty well-known player, right?
Oh, yeah. Big company.
But Sable Offshore is a bit more under the radar.
Definitely more niche.
Yeah, they're focused on offshore production in a specific region.
Right.
So what's the thinking here? Especially with that smaller stake in Sable.
Well, Occidental's a bit more straightforward, I think.
Okay.
It's potential upside from oil and gas price movements.
So kind of a hedge against inflation.
Exactly. Something a lot of value investors look at closely.
Right, right.
But Sable Offshore, now that's the one that really piqued my interest.
Yeah, Sable definitely caught my eye too.
Especially given how much you've been following energy markets.
Yeah, it's not a typical pick.
Not at all.
So I'm really curious what Lilu sees in them.
I think it illustrates something really important about Himalaya Capital's approach.
Okay.
They're willing to invest in these really specialized energy assets.
Okay.
Assets that could benefit from these global demand shifts.
So he's thinking long-term again.
Absolutely. He's looking at the big picture.
And maybe anticipating changes in specific energy markets?
Right. Maybe tapping into new sources or new technologies.
That others haven't fully grasped yet?
It's possible he's seeing something that the rest of the market is missing.
So we've covered quite a few companies now.
We've made some good progress.
But I'm also curious about what's not there.
Ah, yes, the things that are conspicuously absent.
Right. You pointed out some sectors that are noticeably missing,
Mhm.
and that could be just as telling as what he is investing in.
Absolutely. Sometimes what you don't see tells you just as much as what you do see.
So what's missing?
Well, for one, not a lot of exposure to consumer discretionary goods,
Okay.
and real estate pretty light too.
Now, those sectors are usually pretty sensitive to economic cycles, right?
Oh yeah, very much so.
So he's maybe anticipating some headwinds there.
It's possible.
Maybe concerned about things like inflation, interest rate hooks,
Could be. He's definitely a cautious investor.
or even a potential economic slowdown.
He might be thinking about that too.
So maybe he's playing it a bit safer in those areas.
Yeah, prioritizing stability and value over more speculative plays.
Which could also be why we see such a heavy allocation to those two giants.
Bank of America and Alphabet.
Right. Those are seen as more resilient in uncertain times.
Exactly. They're kind of the bedrock of the portfolio.
And, this brings us back to that idea of Li Lu's as a contrarian thinker.
He's always been one to chart his own course.
Yeah, he's not just following the crowd.
He's looking for value where others might not see it.
And the things he's not investing in can be just as important as the things he is.
Absolutely. It's all part of the puzzle.
So if we try to pull all of this together, what's the big picture message here? What can we learn from Lilu's choices?
I think it's a roadmap.
Okay.
Not in the sense of go buy these specific stocks,
Right.
but more like this is how a seasoned investor approaches building a portfolio for the long term.
A blueprint for success.
Exactly.
Okay, so walk us through it.
Well, first of all, I think it reveals a really fascinating combination. Strategic bets
Okay.
and calculated risk management,
So he's taken some chances.
but he's also hedging his bets.
Right.
He's clearly bullish on the long-term strength of American finance.
And not just any finance.
Right, he's not just buying any bank stock he can find.
He's looking for companies with those diverse revenue streams.
Right, companies that can weather different economic conditions.
So he's not betting on a sector.
He's betting on specific qualities within that sector.
Got it.
And then there's his approach to technology.
Yeah.
He's not afraid of it.
But he's also not blindly chasing every hot new company.
He's focused on those with durable competitive advantages.
Like Alphabet.
Right, companies that can sustain growth over the long haul.
So not just chasing hype.
No, he's looking for substance.
And of course, we can't forget those energy plays.
Right.
Occidental Petroleum is that more traditional hedge.
Mhm.
And then Sable Offshore, which really hints at that willingness to explore more specialized energy niches.
Exactly. He's looking beyond the obvious.
Considering factors that others might be overlooking.
That's where the real opportunities often lie.
But what really strikes me
Yeah.
is how all his choices seem to reflect this certain cautiousness,
Mhm.
maybe even a bit of skepticism.
About the overall economic climate.
Yeah, is he sending us a subtle message here?
I think it's a possibility.
Like he's saying, hey, pay attention to these signals. Things might be a little rocky ahead.
It's a valid interpretation.
Yeah, it's definitely something to think about. Yeah, it's almost like a warning sign, like proceed with caution.
Right.
So I don't know. What do you think?
It's food for thought, for sure.
Yeah.
I mean, it's definitely something to consider as we look at our own portfolios.
Right.
What stands out to you from all of this?
Honestly, for me, it's that focus on finding value where others aren't looking. Like Lou isn't afraid to go against the grain.
You're right.
Whether it's that big bet on Bank of America when everyone else is talking about fintech,
Right.
or that stake in Sable Offshore.
Yeah, he's definitely got his own thesis and he's sticking to it.
It's like he's not swayed by the noise.
Nope.
He's got his own conviction.
And that independent thinking is crucial.
Yeah, especially today when it's so easy to get caught up in the latest trends.
Oh, yeah.
The fear of missing out is real.
Lilu reminds us that successful investing isn't just about picking stocks.
Right.
It's about understanding the bigger picture.
The economic landscape.
Exactly.
Identifying those companies with strong fundamentals.
Right.
And then having the patience to let your investments compound over time.
Patience is key.
Yeah, it's not a get-rich-quick scheme.
Definitely not.
It's a long game.
Absolutely.
So as we wrap up here, I want our listeners to really think about what we've unpacked today.
It's been a great discussion.
Does Lilu's approach resonate with you?
That emphasis on finding value in overlooked corners of the market
Those companies with strong moats.
and that cautious approach to certain sectors.
Does that align with your investment strategy?
And remember, it's not about copying Lilu's portfolio exactly.
Right.
It's about understanding the principles behind his choices.
And applying those to your own unique situation.
What are your strengths?
Yeah, what are your areas of expertise?
Where do you see potential opportunities?
Maybe even opportunities that Lilu himself is overlooking.
It's possible.
That's the real takeaway from this deep dive.
I agree.
It's not just about the specific companies.
It's about learning to think like a master investor.
And Lilu's portfolio gives us a fantastic roadmap for that.
It does.
Shows us how a seasoned investor approaches these decisions.
The long-term perspective.
A focus on value.
And a healthy dose of skepticism.
Well said.
Thanks.
So thanks everyone for joining us on this deep dive into Lilu's Q4 2024 portfolio.
It's been a pleasure.
We hope you found it insightful and thought-provoking.
Definitely.
And remember, the journey of investing is a continuous learning process. The more we learn from others,
the better equipped we are to navigate this complex and ever-changing world of finance.
keep exploring,
Keep learning.
and happy investing.
See you next time.